Well, welcome to Park City's Market Talk webinar, where you're going to get the latest news about what's been happening in the Park City real estate market. I'm Ron Wilstein, broker at Keller Williams Real Estate in Park City, Utah.
And I'm Jeremy Wilstein, buyer consultant for the Wilstein team, and we're here to share with you what's been happening in the Park City real estate.
We're broadcasting this evening from our offices near the Canyons Resort in Park City, Utah. And we bring these presentations to you live each month on the second Tuesday of the month at 7 p.m. Mountain Time. We do this to be your source for current information about the Park City real estate market. And we present our Market Talk webinars to keep you informed about any changes that happen in Park City real estate. We also are here to answer your questions. So if we don't cover topics, feel free to give us a call. In tonight's presentation, we're not having a question and answer session due to its length, but we do invite you to contact us with any questions that you have. Of course, before we get started, it's December. We want to wish everybody a happy Hanukkah and Merry Christmas, happy holidays, and a good New Year. Well, let's begin with our topics for this evening.
So we're going to begin tonight's presentation by updating you on what's been happening in Park City real estate market over the past 12 months.
And then we're going to look back over the past 8 years, going back to the height of Park City's real estate market, and make some observations about trends and what we're likely to see occur in 2013.
Then we're going to share with you about some recent upgrades to all our local resorts and tell you how you can ski and snowboard for free this season through the Quick Start program.
And we'll introduce you to our website. Actually, we're going to not take the time to do that in this session because we're going to devote the time to look at predictions for the 2013 season for Park City real estate. Before we begin our topics, I want to remind you that you can always go back and watch any past sessions of Market Talk webinars. We've covered a variety of topics, and you can watch them. Simply go to ronwilstein.com/webinars and select the webinar on the topics that are of interest to you. They're available to you 24 hours a day, 7 days a week. So without further delay, let's get into this evening's topics. So let's look at what's been happening over the past 12 months.
So the information that we're going to share with you covers closed sales over the past 12 months from December 1st, 2011 through November 30th, 2012. And then we're going to compare the sales activity to the same time period the year before. So the total number of homes, condominiums, and vacant land sold during the past 12 months is up by 9%, or 95 sales, from the total number of sales during the same time period the year before. There have been 1,199 sales in Park City over the past year compared to 1,104 the year before.
And when we break that down and look at it in terms of homes, condominiums, and lots, there were 524 homes that sold during the past 12 months compared to 462 for the year before. So that's a 62% increase in homes, or it's up 13%. Condominium sales are also up by 11%. We've had 528 sales this past year compared to 475 the year before. So that's up 53 sales. Lot sales, however, are down by 20 sales. This is down from 167 to 147 this past year. It's about a 12% decrease in the sales. So let's look at it a little more specifically for each category.
So the number of home sales within the Park City city limits is up 13% from the year before. There were 170 sales during the past 12 months compared to 150 the year before. And then sales are also up in the Snyderville Basin with 354 sales during the past year compared to 312 the year before. So this is an increase of 42 sales, or 13%.
And when we turn to condominiums, they rose also by 12 or 16% within the Park City limits, with 310 closed sales within this past year compared to 268 the year before. So that's an increase, 42 sales. Condominium sales in the Snyderville Basin, which is the Park City County area, rose 5%, or 11 sales, from 207 the previous year to 218 during the past 12 months.
And vacant land sales were mixed, with them rising in the Park City limits and actually falling in the Park City County area or the Snyderville Basin. Within the Park City limits, the number of lot sales rose by 8 sales, with 34 sales this past year compared to only 26 the year before. So that's an increase of 31%. Lot sales fell in the county area, with 28 fewer sales during the past 12 months compared to the year before. So this past year, we saw 113 sales in the Snyderville Basin compared to 141 the year before. So this amounts to about a 20% decline year over year.
So all in all, we are continuing to see the number of sales increasing each month, and this is very good news for our Park City real estate market. Now let's talk about prices. Our property values are mixed in all 3 categories: homes, condominiums, and vacant land. So let's look and see what happened in each property segment. Home prices are up by 4% within the Park City limits, with the median home price rising this past year to $1,018,750. This is up from last year, $975,000. Unfortunately, property values dropped overall in the Snyderville Basin from $643,750 as the median price down to $599,000 for the past 12 months. So that's a 7% decline. So while the number of home sales in the Snyderville Basin rose by 13%, home prices actually fell by about 7%.
In condominium prices, they were relatively flat, rising slightly in Snyderville Basin and falling slightly within the city limits. Condo prices fell within the Park City limits, but they did rise in the Snyderville Basin, as I said. The median price for condos within the Park City limits fell by $5,000 or 1%, from $505,000 to $500,000 even during the past year. Condo prices rose by 2% in the Snyderville Basin, rising from $263,450 the year before to $269,450 this past 12 months. Then if you take a look at land values rose in the city and in the county areas. The median price for vacant land in Park City this past year was $500,000 compared to $452,500 the year before. So it's about a 10% increase. And lot prices in the Snyderville Basin rose by 47% over the previous year. They climbed from $160,000 to $235,000, a big increase in there.
So it's good to see the values increasing as well as the number of sales increasing. Now, let's take a moment to look back over the past 8 years, see what occurred in Park City at the very height of the market, which was in 2005, and then look at where it is in our current market, 2012, which is going to come to an end in just a couple of weeks. On this chart in front of you, we're showing you the total number of closed sales each year. Again, these are all homes, condominiums, and vacant land combined.
So the height of our market was in 2005. This is when we saw the greatest number of sales in Park City history. There was a record number of sales with 2,989 properties sold that year. This came to an average of 8.2 sales per day among all real estate brokerages combined. So that's homes, condos, and vacant lots in Park City and Snyderville Basin. Then in 2006, the real estate bubble popped and sales dropped for 4 years in a row. In 2006, the number of sales fell by 42% to a total of 1,736 closed sales, or 4.8 sales per day on average.
I remember that drop going from 8.2 a day to 4.8 was really quite significant. But we saw 3 more years of decline with 1,472 sales in 2007. That's a 15% drop, or down to about 4 sales per day. Then it dropped 45% to 810 sales in 2008. So now we're down to 2.2 sales per day. And then an all-time record low number of sales in Park City's history was in 2009 with only 693 closed sales. That's 1.9 sales per day. That's a total drop of 77% from the market's height in 2005. So we were seeing, among all real estate companies, all brokers combined, very, very few sales. The good news is, it finally did come to an end. The market started to recover, and the number of sales rose by 38% in 2010 from that 693 figure all the way up to 955. Then in 2011, sales climbed to 1,112 by year end, and now as of the end of November 2012, we have surpassed that total number of sales that we had all of last year, with thus far 1,122 closed sales through the end of November. Now this works out to about 3.4 sales per day. Now the additional 104 sales that are reflected in the yellow extension at the top of the green bar is a projection of how many closed sales are likely to occur by the end of this year, based upon the number of closed sales thus far during the first 11 months of the year. Now, as you can see by this graph, the Park City market continues to strengthen. It's improving steadily over the past 3 years, and we, of course, will report next month on the final numbers in our webinar, and we'll bring this chart to a close. But tough 4 years there, but it's nice to see us pulling and fighting our way out of it in today's real estate market in Park City.
So this past weekend, Deer Valley opened for skiing. This means that all 3 of Park City's resorts are now open and fully operational. Well, not all the runs are open, but they all are open. We also received some fresh snow during the past couple of days, and more is in the forecast. So we're off to a good start this season. I think all the way up through Saturday, there's a chance of snow every day.
Yep.
Last month, we shared with you during our Market Talk webinar many of the upgrades completed at each resort, so we're not going to discuss them in detail today.
We do, however, want to encourage you to find your way over to the newly remodeled Mid-Mountain Lodge at the Park City Mountain Resort. Also check out the new high-speed detachable quad lift at Deer Crest. That's replacing that little baldy lift, which used to creep along as you, at kind of record slow pace for Deer Valley as you try to get up the hill. I know that I'm going to be over there skiing more now that there's a high-speed quad to whisk me up the hill. Jeremy, let's not forget to tell people about the fact that for the first time ever, all 3 Park City's resorts were named to the top 10 resorts in North America by the readers of Ski Magazine.
Yeah, that's right. And all 3 of our local resorts did make that top 10 list after 5 consecutive years of being rated #1 resort in North America. Deer Valley dropped down a notch to the 2nd position behind Whistler, that took the top spot by the readers of Ski Magazine. Nevertheless, Deer Valley is still the top of their game, referred to by one reader of Ski Magazine as the Ritz-Carlton of ski resorts. Deer Valley invested $8 million into the resort this year and remodeled the snow park restaurant at the base of the resort.
The Park City Mountain Resort was named #4 overall by the readers of Ski Magazine, but they also selected Park City Mountain Resort as #1 for resort access among all U.S. ski areas. No doubt the $10 million invested at the resort has brought about some great improvements, including they too have a new high-speed lift and some new glade skiing and riding. So by all means, check it out when you're on the mountain.
And for the first time in its history, Canyons has been named the top 10 North American ski resort, rounding off the 10th spot. No doubt investing more than $50 million in infrastructure investments since 2010 and putting in the only enclosed heated seat chairlift in North America, 300 additional acres of intermediate and advanced trails on their mountain, and other improvements at the resort has really made a difference in the rankings among skiers.
That's right. I think just a couple of years ago they were 20th and climbed all the way to the top 10. So that's great. Outside Magazine, which is a leading active lifestyle magazine, also announced last month in November its top 40 ski resorts in North America. And Canyons Resort was ranked #4 on their list. And by the way, Canyons were the only Utah resort in the top 5. So,
we're very fortunate to live and ski in such a wonderful place, and for Park City resorts to be on the top of their game when it comes to competing with the other worldwide first-class resorts. So get out there with your skis and snowboard.
That's right. Enjoy this and take it in for sure. Well, speaking of skiing and riding, Jeremy, let's remind people who are watching this webinar that they can ski or board for free during the ski season because of Park City's Quick Start vacation program.
Yeah, for those of you who will be vacationing here in Park City this season, we'll be flying into Salt Lake City International Airport. We want you to know that you can fly in and make your way up to Park City and ski or snowboard for free the day of your arrival.
And this program is called the Quick Start Vacation Program. It's been going on for a number of years up here. Here's how it works. You catch a morning flight from your home city, and upon arriving here in Utah, you make your way up to Park City. You then take your airline boarding pass, don't throw it away, along with your special Quick Start Vacation voucher and your photo ID to the ticket window at any of Park City's 3 resorts, and they will give you a free same-day lift ticket at their resort. So it's good at Deer Valley, Canyons, or the Park City Mountain Resort.
Yeah, and keep in mind there are some blackout dates. So if you're coming to Park City before December 23rd and after January 5th through February 16th, or anytime in April.
If that doesn't...
That was wise.
Read the screen if that doesn't confuse you. There are blackout dates, obviously.
We don't read out the script.
Right before Christmas through New Year's is blacked out, and then pretty much after the middle of February through March, it doesn't apply. But the rest of the time it does. So if you can take advantage of it, enjoy the free skiing, go to BuyParkCity.com. You can register for the program there, and they will automatically email you that required voucher. So be sure to do that before you leave home.
Mm-hmm. All right, and now it's time for our predictions of what we expect will occur in Park City real estate in 2013. So, Ron, Father, what do you anticipate will happen this next year?
Well, this is always a fun time to look back over the past year and think about what is going to happen during the new year. And so I'm going to give you my best shots and estimates. And I was looking over last year's, and did pretty good. So we'll see. Anyway, let's start with homes. Home sales are likely to continue to be strong throughout 2013. Primary residences are always in demand for families living and working here in Park City. And I also expect to see during the current ski season an increase in second home purchases in 2013. We saw that last year, and the climate and the mood and the environment for real estate is only better, so I expect that to continue. Home prices in both Park City and Deer Valley are on the rise, as we reported earlier in the webinar. Many home buyers and investors now know that our home prices in 2012 have indeed bounced off the lowest prices in Park City that Park City has seen in years. And as a result, many of them are buying now before prices rise. So people are always looking for the bottom of the market. The stats are very clear. We have hit the market bottom in terms of price now. We hit it in terms of sales back in the middle of 2009, and we are bouncing upwards. So this is the time to kind of hop on it if you have intentions of buying a property before the prices rise further. When we look at condominiums, it's important to consider its history. In 2010 and 2011, condominium prices fell between 20 to 22% year over year. This was a huge drop. And this past year in 2012, prices were flat or rose slightly. Now, I can't tell you that there won't be any more reduction in condominium values, but it will be slight, if at all. And clearly, our stats from earlier that we presented are showing that prices are increasing. So based upon 2012 sales and our reduced inventory of listings, we should see single-digit increases in prices in 2013. Let me just mention something. I didn't have time to add this chart, but I was looking earlier today at number of listings, and ever since the Park City Multiple Listing Service is keeping a record, we always on the first day of each month look at how many listings. And this past month, we have had the lowest amount of listings in MLS recorded history. So our inventory is down, and that's only going to, because of supply and demand, cause prices to rise. So if you're thinking about buying, think quickly, because this is a good time to do it. Now, the inventory of distressed properties, meaning bank-owned properties or short sales, is also at a record low level since the beginning of the mortgage crisis. So let's take a look at that for a moment. In 2010, distressed properties sales made up 35% of all sales in Park City. Then in 2011, distressed properties made up about 1 in 4, or 25% of all sales. This year, in 2012, only 13.5 sales in Park City are distressed properties. So the inventory is dropping, the number of qualified properties is dropping, and this is really positive news. Now, only about 6% of all listings currently on the market as of today are distressed properties. In fact, 4% of them are short sales, and just fewer than 2% are bank-owned sales. I wanted to show you a chart we threw into the webinar just before going on tonight. This graph breaks down the percentage of bank-owned sales on the left column here to 10%, with an additional 3.51 being short sales. So that's what makes up the 13.5% of sales of our total inventory. To the right, you can see that the limited supply of distressed properties is really reduced, with 1.47, just under 2%, being bank-owned properties, and a little over 4% being short sales. So this is a very small amount of total sales compared to most other places around the country. We're very fortunate here in Park City because of this, but this is very good news because it postures the Park City market to recover further. And so we like to see that, because those distressed properties were always the ones bringing the values down, the prices down. They're almost gone. Now, this is where smart investors are jumping into the market and are making some great deals in anticipation of rising prices in the next several years. And in the meantime, they're receiving good rental income while they wait if they're buying an investment property. These investors have a lot of cash at their disposal to buy properties in Park City. And while it's true that financing for many of these properties is often hard to come by, with recent financing reforms, 52% of all sales in Park City this year have been done with all cash. These investors have the money to make these purchases. They do not need the loans to do so, and so they're going out, and that's why we're seeing so many transactions completed with all cash. Now, as I reported earlier, vacant land sales have strengthened in 2012, and I expect to see them remain pretty steady through 2013. The good news is financing is starting to loosen up for land purchases, for while we didn't have any options there, as well as new construction loans. I was talking to a lender today who is going to be completing a multi-million-dollar construction loan. So people are back building and buying land, so this is all very good.
All right, so with this in mind, what advice do you have for buyers and sellers in 2013?
All right, well, let's talk about the buyers first. If you're considering buying a property, I wouldn't wait. This is clearly the time to start looking online at properties, and if you find a property that interests you, go out and buy it. This is not the time to go, well, I'm not sure, maybe I'll wait till I get into town for skiing, or maybe I'll wait till next year, which is often the pattern in our resort community. Because those values are likely to be up. And over the years, I've been up here 24 years, I've seen this pattern, and it repeats itself. Come back the next year and you're paying more for the property. Now, I'm not suggesting that you don't try to negotiate the best you can in terms of getting a great price, but you don't want to haggle to the very last cent. And when we had a large supply of distressed properties, it was a different situation. Because if you do this, someone else is likely to buy the property out from underneath you. They're going to walk away with it instead of you. So it's good, get a good price, get the best price you can, but make sure you end up owning the property instead of someone else. In today's market, you're buying a property based upon where the market is heading in the future and not just where it is today. So do keep that in mind. But when we turn to sellers, if you're a seller, as always, you need to ask yourself, why am I considering selling my property? And this is probably the most important question you could ask yourself. Property values appear to have stabilized and are now starting to rise. While this is very good news, it's important to realize that property values are not likely to climb at the pace that we saw in 2004 and 2005. The easy-to-obtain financing days are over, and those easy-to-get loans fueled the rapidly rising prices before the mortgage crisis occurred. So while I do expect prices to rise in 2013, they're not going to take off like they did in previous years. So again, you want to ask yourself, why am I considering selling my property? If the answer is to get closer to my family or to get into what you perceive as a better investment, then by all means, you put your property on the market and you try to sell it now. If, however, you don't have a real reason to sell your property, you don't need the equity for other purposes, and you're still using and enjoying your Park City property, then this is probably not the right time for you to put it on the market. These days, only about 50% of all listed properties on the market sell. Now, if you don't have a real reason to sell your property, if you put your property on the market, in all likelihood, you're going to tend to overprice it. After all, you don't really have to sell it. And those who put their properties on the market when they don't have to sell usually join the host of others that are overpriced because they have little or no motivation to sell their property, and as a result, the property doesn't sell. You don't want your property to join that group of properties that do not sell, and I'm sure you do not want to do that to yourself or your property. Today's buyers are very well educated, and they know the value in the marketplace. They will rule out an overpriced listing at first glimpse on the internet. They won't even waste their time to go through it when they're in Park City. So if you have no real reason or motivation to sell your property, don't bother listing it. Use it, enjoy it, but don't put it on the market if you're likely to do so at an overpriced price, because otherwise it's just going to sit there, it's not going to sell. Now, our market statistics are very clear on this point, and I do want to stress this, that most sellers are coming off their list price between 4 to 6% in order to sell their properties. This is pretty consistent. There are few exceptions, but it's something you can really depend upon. And this means that if they list their property at a reasonable price, they'll sell it for roughly 4 to 6% off the price. If, however, if they list their property more than 10% above its fair market value, they're never going to see any offers. And they don't even get the opportunity to negotiate with buyers. And of course, their property doesn't sell. So if you're a seller and you're not comfortable selling your property within the proper range of its value, it's best for you to put off putting your property on the market at this point in time. Wait until the market strengthens and you'll be better off. And frankly, the other properties, the supply will be less, values will go up, and it will drive the market into your direction in time anyway. Finally, let me say a word or two about our economy. We are certainly living in a very interesting time, a fragile time, if you will. Our country has huge debt, and every day we're reminded that we're about to go off the fiscal cliff, and when January 1st rolls around, we'll find out if we did or not. The politicians are busy posturing and insisting on their way, and frankly, I'm not sure if either side got their way 100%, it would make a big difference. But here's what I know. The markets, both the stock market and the real estate market, have to some greater or lesser degree factored in the uncertainty that exists right now in their marketplaces. This is why we're not seeing a lot of volatility in the stock market that we would otherwise expect under the fear of a fiscal going off the fiscal cliff. Even if you go over the fiscal cliff, the politicians will do what they always do afterwards, and they will make an adjustment and life will go on. It also needs to be pointed out that however weak our country is from an economic perspective, we remain the strongest country and economy in the world. No, we're not what we once were, but we continue to be stronger than other countries in the world. We don't want to lose sight of it as we're constantly bombarded with the news about our own economy. The stock market has lost its appeal to many investors because they've been beaten up by it. They often have lost a lot of money in it. And it's very difficult for most people to invest these days in the stock market. The private sector is afraid to get back into the equity markets, and as a result, they're turning to real estate. Now, while an appropriate balance between the two markets would be the healthiest for our economy, right now, at this point in time, real estate markets across the country are becoming stronger and stronger, and every indicator seems to suggest that is only going to improve. So while it would be great if our governing parties would come to an agreement on how to operate the country, no question about that, we know that businesses will continue doing what they have always done. They will find solutions for today's problems. Somehow they turn out making a profit at the same time. And for this reason, I'm fully convinced that whatever happens in our state and our national economies, real estate will lead the way to a better and stronger economy for our country. It is always real estate that pulls the economies up, and I expect that to be the case in 2013. Well,
all right.
That brings us to the end of this evening's webinar, and this is the last webinar, Park City Market Talk webinar of 2012. We've enjoyed presenting these each month, and we're glad that you've chosen to join us this evening.
And we also want to remind you, you can always go back and rewatch webinars, this evening's webinars or the past webinars, by going to ronwilstein.com/webinars. We have a host of webinars on a variety of different topics, so check them out.
And if you are considering selling your property now or sometime in the future, we'd like to send you our latest issue of our Smart Seller magazine. It's brand new and it's been updated with some new marketing methods that have proven to be very effective. So if you're interested in that, to receive a copy, you can either type in your name and mailing address in the Q&A chat box below our pictures, or drop